From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB on this Monday afternoon. I'm Nadine Blaney. Really nice to be here with you. If you are watching this live, on demand, or listening to us on podcast form, we're just past 4 p.m. in Sydney, and it's been a positive session so far, but we are gaining momentum into the close, and I dare say it could have to do with what we're seeing in Chinese futures. As you well know, Chinese markets have been closed for the Golden Week holiday, including today. We've had the Hang Seng trading and just going, parabolic. A couple of guests that I've spoken with today have just been shaking their heads saying, this is a once in a century, perhaps, move that we've seen in Chinese stocks. So Chinese futures are going through the roof today as we speak. So if futures are any indication, we could see Chinese stocks continue their upward trajectory after they reopen from the week-long holiday. So perhaps that is what is helping to drive some of the enthusiasm in this local market. Safe to say we are seeing a positive session around the region. So it's not just the Australian market that's higher by about 0.7%, but also we're watching Japan's market up by more than 2%, the Nikkei and the Topix, also the Hang Seng up by more than 1%. So Asian markets also tracking Wall Street higher after that really strong jobs report that came through on Friday. So yeah, just a perfect scenario. You might want to go back and listen to an interview that I conducted with Chris Weston from Pepperstone at 11 o'clock. Get his view on what potentially could happen in terms of Chinese markets, and also just how the markets reacted to that non-farm payroll report on Friday, going from a soft landing to a no landing potentially scenario there. So just to highlight, we've got a number of wonderful interviews up online for you to take a listen to. Gary Ng from Nextaxis as well joined me to talk about that Chinese move in stocks and saying, well, things don't go up in a straight line. Clearly, there will likely be some sort of a pullback, some sort of a cooling of the enthusiasm around Chinese equities. But for now, he says, it's looking good, and well, Australia could be a beneficiary. He reckons if those Chinese markets continue to go up, iron ore price could be supported, and that is good for our mining space. Must say, though, on our three themes, yes, we have that Chinese optimism. And yes, we've got a lot of optimism around the lithium names today after Rio Tinto made the approach and confirmed the approach, I should say, after weeks of speculation for Arcadium Lithium. And that really has helped to lift the lithium plays across the board. Incidentally, Rio Tinto, the worst performing big miner, down by 2%. And we have a wary eye on the Middle East. We are hearing about more bombing as Israel looks to mark October the 7th. The latest is that we do have the Iron Dome appearing to fail as Hezbollah really does attack some of those northern cities. It's happening as Israel is also bombing parts of Lebanon. So there's a lot going on there. Israel is targeting the Hezbollah weapons storage facility in Beirut as well. With all of that as the backdrop, after the biggest gains for oil, weekly gains, I should say, in a year, we have seen some tempering of the enthusiasm for oil today, just to put a market spin on what we're seeing in the Middle East. So we are watching a little bit of a cooling in terms of the oil price, and I'm just getting the latest now. So we will keep an eye on that. We've got European markets coming to life. We will be talking about ECB potential rate cuts coming through in August as well, if the French central bank official is anything to go by. He was speaking earlier today. So here are the banks going from strength to strength today. You can see NAB there up by 2.25%. Commonwealth Bank up by 1.67%. So interesting to see the banks lifting at the same time as we're seeing the miners lifting as well. And I'm talking about BHP, Fortescue up a punchy 3%. Min Resources up by close to 5%. You can see the exception to the rule there is Rio Tinto after making that bid for Arcadium. I will be speaking with Keith Veladova a little bit later about that one, so I won't give you any commentary on it, but I can say that some of the other lithium names are looking pretty good today as well. Just take Pilbara, take Mineral Resources, take Liontown, which is up by 20% just past 4 p.m. here in Sydney. So Rio Tinto confirming that approach for Arcadium Lithium, non-binding, but in play after weeks of speculation. West African Resources shares plummeting. So there was reports that Burkina Faso's government plans to withdraw its mining permits. It says not true, that the government there remains supportive of its operations, but the damage has been done, down by close to 20%. I just spoke with Dr. Sam Huppert, who is the CEO of Pro Medicus. It actually hit a record high today on a $98 million contract renewal with Mercy Health at a higher fee, longer contract. So if you haven't heard it already, you might want to go to the website to listen to Pro Medicus' CEO talk about what's in the future. So that share price up by 1% at the close. And GQG Partners still seeing inflows, $3.2 billion of inflows in September. Well, a warm welcome to the COB, Keith Della Vedova, who's joining us from CPS Capital from Perth. Keith, good afternoon to you. Thanks so much for joining us. Boy, that was a pretty punchy session, all things considered, when you consider half the country is off on a public holiday.
Yeah, thanks, man. It's I think we've been saying this. I was rereading our end of financial year commentary around lithium, and one of our key pointers was we're probably further from the top than we are closer to the bottom. So to having your toe in at the moment was probably a pretty good idea. And Citi covered it just recently that we see a 20 to 30% rebound in lithium prices, which should drive stocks higher. And then you factor in counter-cyclical, the big guys will start making M&A like Rio have, against the grain of what everyone else is thinking. So we've just seen one move now. We've seen previously with Pilbara and Latin Resources. So we're starting to see the bottom of the cycle where the big guys go, right, these are cheap. We're happy to pay a bit more of a premium. It takes other companies out and consolidates what's on the market as well. So if we see Latin go offline, we see Arcadia going offline, all that money then goes, right, what else do we have to go back into in the lithium sector? So that then consolidates, how other many good deposits are out there. And I don't think it's finished here as well. They're talking about the major shareholders of Arcadium looking for around $8 billion, which is a significant way from where we are now. And they've traded as high as, $11, $12, so, over the sort of last 12 to 24 months. So even at $6, I'm not sure that would really get the deal done. And you also spoke about the rest of them sort of jumping up across the sector. We've seen 20 to 30% rebounds in a lot of stocks. A lot of this will come down to short covering as well. So you can see Pilbara, obviously the most shorted on the ASX. You can see Siona, you can see Liontown, you can see Min Resources in there. A lot of these companies are some of the heaviest shorted companies on the ASX. So now there's a little bit of M&A coming in. We'll start to see these big guys go, well, look, it's probably a bit risky if we get bought out. The pain is probably not worth it. So I think that's also playing a bit of catch up for a lot of the other stocks out there as well.
Yeah, I mean, I guess a lot of people are also, the short squeeze for sure. But is this sort of classic bottoms in type scenario when you think of the lithium price, which has obviously suffered? I mean, we've got this supply demand imbalance right now. Yes, demand is forecast to grow exponentially, but I mean, it's been pretty tough in the lithium space. So what's your outlook for price?
Yeah, I think if you go back to a lot of the banks reporting, they think around 16 to 17,000 US is probably the next sort of 5 years is where prices should be. And I guess, again, when people are looking at what company is going to be profitable and what aren't, a lot of the hard rock miners, it's a lot more to process. So if you have a look at the chart from Wood Mackenzie put this together, but over the next 5 years, we're probably going to be quite flat. And then as we start to get through this glut, then we're probably going to start to see it increase towards 30,000. So it's what's going to survive over the next 5 years? Are the core lithiums of the world really going to survive? Are the Sionas, when processing the hard rock and not having a good grade is probably not where you want your money? I wouldn't have thought there's better options out there. And then it's like, who's in the development phase? You look at the Galan Lithiums, I guess, who are trying to sort of, go into production at a time where the cost of building is higher, and they get diluted. So, again, it's like, have a look at the deposits on screen now. What's a quality deposit? What isn't? And personally, I think brine, as it evolves, and maybe this is where Rio are going with their Arcadium bid, is, going into and developing brine assets, because the cost of getting these the cost of going into production is a lot higher. But once you're in production, your capital costs are significantly less. So, you can operate between 3 and 5,000 for brine assets. So it's a lot better than the hard rock deposits that we're seeing, where, some of them are above, I think, 1,000 easily. So it's like, are these really good deposits? And then brine is sort of seen as more of a green and less sort of environmentally harmful. So you can see on the screen now there's a lot of I guess brine assets which are higher quality, and I think this is where Rio's going, is to pick up these assets and rather than develop them themselves, because again, brine is there's not many companies or professionals outside of China who have developed lithium brine assets. They're very difficult to bring into production. They're capex heavy. The US government's giving out a significant amount of loans to develop these assets in particular. So I'm tend to leaning towards the brine, because I think that's where the future lies in lithium. So, there's a lot of sort of companies that are, sitting on good deposits but probably aren't fully valued in the market at the moment. But over time, with the lithium price increase and sentiment increasing, we're going to start to these companies either get taken over, or as they get closer to production and on their PFS, DFS, or final investment decisions, they'll start to get revalued in the market as well.
Yeah, really interesting. Okay, so lithium brine names that come to your mind that could potentially be undervalued?
I think Arcadium's probably one of them. Straight off the bat, $6 is probably only just touching the surface of it, because they're already in production. You go to your SQMs as well. You have a look at those and go, right, well, is that fully valued in? Probably not at the end of the day. So you can go to Albemarle as well. Again, these are large caps.
Yeah.
So it's a little bit different to the small cap end, but you can start to see as you go down the categories, and there's a lot more risk as you start to get into these. But they've got to be developed. There's an area in the US called the Smackover, which is where Exxon and Albemarle are as well. There's a small cap on the ASX called Pantera, PFE. They're doing a bit of a land bank at the moment and developing a pilot plant. But, you'd expect where these guys are, and this has happened in the oil sector for a long period of time out in the US as well, where these big guys just go out and go, right, well, we want that bit of land, and it's not really about bringing that into production. It's just about going out and acquiring these pieces of land purely because it's strategic to their development, and they're not looking at a 2 to 5 year view. And you've even seen the Rio boss come out and say, we don't care about what lithium does in the next 12 to 24 months, which is true. They're looking at a 5 to 10 to 20 year sort of outlook. So, you look at something like Pantera, which is around Albemarle, it's around off the top of my head. So they're just sort of land banking ones where these guys are actually going to get taken out, not for the value and not developing their asset, but from the majors, land banking these assets and just acquiring the whole area. So Exxon will do the same thing, and they've got an unlimited balance sheet.
Yeah, and they are moving in a big way. So Pantera's got, lots of land bank coming up. Direct lithium extraction. So in the Daytona Lithium, the Superbird Lithium project has been expanded. So it's adjacent to the lithium brine ground that's been held by Exxon. So super interesting. And so Pantera is PFE. It's listed here. Is it safe to say that things have become a little bit more exciting out west, considering we've got China stimulus coming through, considering, we've got a little bit of M&A happening in the lithium space as well?
Yeah, and we're coming off such a low base in the small cap area as well, in particular, where things were beaten down. I think it's been probably 12 to 18 months, maybe even longer, of some of the worst markets in small cap land that we've seen. So there's a lot of stocks that have just been pushed down for the sake of, no one's interested in that sector, or there's a lack of sort of confidence in, is this the bottom? But I think we're slowly starting to see that now, where clients are coming back to us and going, what are we doing now? What's the next sort of deal that you've got? What's the next opportunity? What sector you think's overdone? And it doesn't need to be a placement. There's plenty of things on market, where you can make a quick 50 to 100%. Again, some of these lithium ones are prime. You look at your wildcats, your deltas, your PMETs and stuff where, they've all bounced, 50% sort of thing off their lows, so they're easy trades. So we are getting that interest now coming back into the small cap end because, there's been, I think you guys have covered this quite significantly over the last couple of weeks as well, is there's a lot of dividends being paid out at the moment. So I think we're around 20 billion in the last 3 weeks in dividends that are being paid out. That money won't just go into cash because we know rates are probably going to come back from here. So that'll be forward thinking and people will start to deploy, not all that money back into the small cap end, but they might be, all right, 5%, 10% of my portfolio is now going to go into small caps. All right, what's a sector that's not trading on its highs? All right, well, the mining sector, Chinese stimulus is coming in. Iron ore, was talked about going to $80, if not less, by some of the banks. Chinese stimulus comes in and suddenly it's back over $100. So, there's lots of commodities where they'll start to, bounce off their lows, and you don't even have to be, going into production or anything like that at the moment. It's just literally picking the bottom and, riding that wave of momentum from the Chinese stimulus.
Awesome. All right, Keith, thanks for wrapping the day for us and the big news of the day, of course, which is that Rio Tinto, Arcadium Lithium M&A. Appreciate your time.
No worries. Thank you.
Take care.
Bye.
Keith Della Vedova joining us from CPS Capital there for a change. Nice to have him. Let's get a view from our guests on the call about that Rio Tinto M&A. Daniel Ortiz from the Stock Doctor and Mathan Samasundaram from Deep Data Analytics.
Look, it is a complex, I guess, deal because of the structure that Arcadium is now with all of the mergers that it's been through. But in my point of view, they are pretty solid assets. At the end of the day, talking about materiality, a few $1 billion to Rio isn't much. If anything, if the deal gets done, it's probably going to be at a lower price than what BHP paid for Oz Minerals. So, not a lot that Rio have to fork out, in my point of view, with, a large amount of upside if the market recovers. But it just depends on whether or not they can agree on a final price.
Do you want to jump in right now into Rio? I think if you're there, you're a long-term player, you can hold. If you're trying to look at the cycles, I'd be a bit careful going into the Chinese update because they need to deliver substantial to make these things add up. So I don't see that. So it's a hold at best. We're not holding any iron ore miners. We haven't held lithium for I don't know how many years. And so I'm not there.
Alrighty, so that was a hold from both of our guests. If you'd like to listen to the extended stock of the day analysis, you can find that online, ausbiz.com.au, up at the top of the screen. Now let's get to leaders and the laggards. Well, I sense a theme here. We've got Arcadium, Liontown, Sayona, and Core, all amongst the best performers. Star Entertainment making an appearance, up by 6.5%. We learned on Friday that JP Morgan had taken a stake in the company. West African Resources, we detailed that already for you. Deep Yellow had a broker downgrade come through, and it is off by 4.6%. Now let's get to some of the small to mid-cap companies. Interesting to see Wildcat Resources up by close to 21%, BrainChip 17%, flipping the page to the laggards, and EnviroSuite. I think there was a change in its management, off by 6.9%, and EZZ Life Sciences, or EZZZ, down by 6.2%. Tonight, we have U.S. consumer credit, but we have a whole heap of FOMC speakers, Kashkari, Bowman, and Muslim. So we'll be looking for any details around the timing and scope of any next interest rate move in the United States. Tomorrow here, it gets a bit more interesting. We have the RBA meeting minutes, so we'll want to know what the RBA will be looking for in terms of jobs and inflation to get them to move closer to a more dovish stance on rates. Consumer confidence. We've got, and that's the monthly from Westpac. We have the NAB business survey for September. We get job ads from ANZ, and we have the RBA Deputy Governor, Andrew Hauser, speaking. And he seems to, inject a little bit more oomph into at least the titles of, what the the RBA is normally titles there. I'm just looking at their speech. It is called, it's remarks by him at the Walkley Foundation. But there is a Q&A, so that might get a bit interesting. He doesn't actually have a title for his speech there. All right, so the market ended up being quite a positive session. We are watching Chinese futures really rip, and we've got the local market up by 0.7%. The Nikkei closed up by 2.25%. So plenty of enthusiasm as the European session gets underway. The ECB probably cutting rates in October. We heard from Villeroy, that's the central bank rep coming from France, so commenting on the ECB. Of course, we are keeping a very wary eye on the Middle East as Israel is marking the October 7th anniversary as the war there escalates. That is the day in business here locally. We look forward to seeing you at 9:45, and I really appreciate you watching, and I encourage you to catch up with all the great content on our website, ausbiz.com.au. We'll see you tomorrow.